China stocks like Alibaba, JD.com, PDD, NEO, Xpeng, they're all trending in today's session. Shares of those Chinese companies surging after China unveiled a stimulus boost for its struggling economy. The package of measures, including funding to boost the stock market and aid share buybacks. Anthony Sassine, KraneShare senior investment strategist, joins us now to discuss. And as we're going to talk about more in just a few, Anthony, it's not just direct China stocks. There are a lot of implications for the global economy as well. People have been waiting for this. But is this enough? Is this what the Chinese economy needs?
I mean, this is a great step in the right direction. We've been waiting for this for many months. We talked a lot about bazooka approach because we kind of thought that the economy needed a big push. And we got something similar today that we can call maybe a mini bazooka, where you kind of see rates cut across the board from repo 14, 21, 7 days, also mortgages, and also to the required reserve ratios as well. So this kind of tells you that the Chinese government is really looking to boost growth here before year end. And you can see that there's a little bit of panic. And usually when, the saying says when the Fed panics, you buy stocks. And this is what we're seeing today with China. And we're seeing China Internet leading the way, because we always said, with clients and previous appearances that the main mechanism of consumption is the Internet names, and these names are going to benefit the most from any recovery in China.
Can I ask you, Anthony, would you also expect to see more aggressive fiscal stimulus as well?
Look, I think China is going to roll out more stimulus in the next month as well. The Fed chief Pan Gongcheng mentioned that there's another rate cut coming. What we want to see happen as well, in addition to this, is demand stimulus type, right? Like sending money directly to consumers, or some kind of a transfer of economic gains from industries and manufacturing to consumption, to just help the consumer recover. Because I think that's what's going to take the recovery for the long term, to make it more sustainable. We should see a recovery in revenue growth that it's been in single digit for the past year or two, held in single digit. That's because of lack of demand, because of low consumption, and because of real estate, of course.
So for investors who have been waiting on China, who have been cautious, who haven't wanted to get involved there because of risk of regulation, risk that the economy was not going to rebound, is this the signal that they should be getting in? Is this a sustained signal beyond just the pop that we're seeing today?
Yeah, this is a very good signal, right? Like that the government is looking finally to make a big impact. But as I mentioned, we need to see now. You're going to see a pop here. You're going to see KWeb and some of these companies, up 10% today, probably good momentum, upward momentum for the next few months. But investors are going to be looking at earnings, right, which are going to be coming up soon. There's also the Singles Day in November, which is also going to be very telling to see if the consumer is responding, if we're going to see that rally continues, right? And these events are going to be key.